Hi there, members. Mike Bell here from the Armchair Trading Floor. Sunday evening, and we are looking to do this week's watch list. What we're going to do is I'm going to actually do a lot of this watch list with clean charts, and we're going to actually go over a number of different things actually. So one of the things I wanted to cover was last week's video. I think I sent this on Thursday or Friday to the full members, which is the US dollar. Been hyping this up for a long time now, pending with the death of the US dollar, as we like to say. But what I think is going to be important is we all just want to continue to grow the community. So get social, follow us on Facebook, Instagram, our YouTube channel. We have been quite slow on YouTube, but there's plenty of videos that we've got that we will be adding on, just then you can be helped in your journey along the way. But if we start off with the dollar, so we're going to go over the recap of the US dollar index, so the DXY on TradingView. So if you guys wanted to obviously have a look at the last video that we shared, we did actually share a video as mentioned on the 15th of August, so the last three trading days where we noticed this spike. We actually started off by analysing analysing the US dollar index on the monthly, and we noticed that we're at that key resistance level off this head and shoulders pattern that does look like it's actually going to form. So we have a potential lower high that's going to be created with this right shoulder. This actually sinks in on a 61.8 fib level as well. So if I just draw on our fib retracement tool from our high to our low, you can actually see that we're probably going to be targeting levels of 83, which is some minor support, and then the floor, which is 78.51, but even lower, to actually take us down to this channel of prices of around 66, 67, but we don't expect that until the years to come. However, if we do see this right shoulder being formed, the next 12 months is going to be very, very interesting when it comes to any XXX USD pairs. So we're at a crucial level where you want to be considering looking at positions to hold for the long term. We're looking at a nice 2-year stretch on long positions that we're going to be holding as well. So if I just go on to here, you can actually see, and this is very, very, very key, we are going to be comparing this with another version of this video as well. But basically what we said was we were looking at two key resistance levels, a psychological level of the 100 on the DXY, which is going to take us to our 78.6 fib, and around that resistance level where you can see that the left shoulder got turned. We obviously had the meltdown where the moving averages crossed at this 100 level as well. But hopefully we just get price to respect this rollover, and we get a rollover at this right shoulder as well, which is the resistance level of the left shoulder to the right as well. If I take this down into the weekly time frame, you can actually see that we've got a bit of a shooting star pattern, shooting star emergence. So we could see price just do one or two manipulative spikes in the next few weeks, but preferably we're going to be looking at rolling over into next week and the coming month, which is going to be very, very, very key for us to target these two moving averages right here. Once we get to a break under 94, we should see a strong meltdown into the back end of 2018. I hope you can all continue your journey with us until the back end of the year, and definitely recap this video, but we will be sharing this on the YouTube channel. I think it's very good information to share with everybody, not just our full members as well. In the previous video that we shared the last few days, we mentioned you want to be taking longs going into next week on your XXX USD pairs, which means that you want to be buying anything such as Euro USD, GBP USD, and more importantly, some of your cryptocurrencies as well. If we go on to touch on the cryptocurrencies, if we go on to, I'll just use a clean BTC chart right here, and we've shared this with everybody before. We're at a crucial support zone for BTC. Our members benefited from the spikes that we had in these yellow circles, where we all took strong buys at the back end of 2017, all made a massive gain. We took further buys here at in the middle of February, and then we all got some decent gains right here in April as well. We noticed that we knew that we were going to get either a break or bounce scenario here, which I was expecting a break above to take us to these levels and create higher highs, higher lows. However, we failed to take out this high at the 10,000 psychological level for BTC USD. Now, where we are right now is we are still in this crucial support zone. We're printing a few signals and spikes into this region where we should all be accumulating your current cryptocurrencies for those that are obviously buying to hold for the long term, or even ones that want to trade. So we're looking at another resistance level, but we need to take out 8,500 is the next target for BTC in terms of upside target. That's where we are right now. We just need to get above this moving average and break above 6,800, which is a very key level as well, because that is another one of the key levels that we needed to take on at the break above once we retested 5,000 to take us on the start of the bull run in 2017. So 6,800, very key level. Remember that we will be touching back on this level again, and if you noticed, as soon as 6,800 was broken in November 2017, we went on a run. As soon as 6,800 was broken above in February 2018, we went on a run. 6,800 again in April 2018, we went on a run. So very important. And again, finally, at the back end of July, you can see here, 6,800, we went on a smaller run as well. So we are back to that 6,300 region. If we can just get above this moving average, we can hopefully see an opportunity to take out 8,500 to start another uptrend. But we had a failed attempt last week on taking longs on BTC. I'll just zoom in and tell you what happened with that particular spike. We had this spike here, and you can see we had longs in from 6,100, and we failed to actually get above 6,620 right there, and then price just retraced, but we got back up to that key resistance zone. So we've yet to break above. I'll just draw on a nice smaller box. We've yet to break above this zone right there. So as soon as we've broken above the 6,600 to 6,800 region, we are going to be seeing a massive spike to the upside. Probably get some resistance around 7,600, but we should be seeing upside now that we've got extra confirmation of this dollar weakness with this head and shoulders pattern potentially forming. In the last video as well, we obviously mentioned that you want to be taking entries on your Aussie dollars, your GBP USDs, etc. You can actually see here where we actually drew on the chart. If you guys were in our previous trade, we actually managed to do a successful trade down to the 72.60 take profit. So nice successful trade there. And we're going to be heading back up to the 0.74 level right there. I expected to get some resistance around 0.73, but we smashed through that with, again, this head and shoulders potentially emerging. We're going to be targeting this moving average around 0.74 as well. If I go back to the US dollar index, it's very important that we take a look, especially when it comes to cryptocurrency, because you've got, since the start, if you look at the correlation between the start of the year up to where we are right now, you can see that this pullback has actually emerged. We've seen no, it's literally just been a straight up for the US dollar, which means that anything XXX US dollar should have went down since the start of the year. So if we just time this from the start of 2018, which is right there, from that point you can actually see where price was down to this level. We've actually literally just went up for the US dollar, which means anything XXX USD has went down. If I go onto our daily chart for BTC and find 2018, if we look at where we were on 2018, you can see there, the first week in 2018 we had some consolidation, but since pretty much January, right there, this is January here, the 1st of January we were here at around the 15,000 for BTC, spiked up to 17,000, but since then we've literally just went all the way down. So that's what I mean in terms of correlation between your XXX USD pairs, and that's why it's very, very, very important. So something to consider for the next 6 to 12 months for your pairs that involve the dollar. Let's go back to the full watch list for the week. A couple of pairs that we wanted to actually have on this week's watch list. We obviously have last week's signal where we got spiked out. We got spiked out by 3 pips, caught the meltdown, consolidated, and we expected a trend line break. We got a bit of a trend line break, but we soon went back up to this key resistance zone right there where we've actually done a retest. Still on a downtrend because we've got lower highs, sorry, we've got lower highs and lower lows being printed. This point where we got spiked out, this is still a lower high, and hopefully we are forming a lower high right there to get us down to our 82.50 target on this particular trade. Some new pairs that we want to actually take a look at is, let's start off with UJ. So we'll go on to USD JPY. So USD JPY, we are looking bearish on USD JPY right now. If I take you to the chart, again, starting off from the daily, you can see nice big bearish candle to close last week. We hit our targets actually last year. You can see where we highlight these key levels. Our key levels are highlighted with this red horizontal ray right there. So we'll actually be targeting 108 first of all for USD JPY. We've got a first moving average crossover, and now price is underneath this 50 MA. So we just need to get underneath this 200-day moving average, and then we should be seeing again price melting to the downside. Zooming further out, we've got a trend line forming right here. Price has literally been riding its way up this trend line, and we are potentially seeing the opportunity to get a nice break below and get to our first level of support. Our first level of support actually lands, and this is why we mentioned 108.50. Again, we've had this level highlighted right here. 108.50, where we've got spikes. We've got spikes into this zone. 108.50 spiked into that zone to reverse. Spiked back into that zone again, reversed. We managed to properly break. However, we've got the psychological 105 level, which obviously kept us up. But again, back at 30th of May, we spiked into this zone, reversed. So as soon as we break through this trend line officially, this is a fake out right there. We've got a lower high actually being printed from last year's high, most recent high in the November, 3rd of November. We've actually got another lower high right there at 11315. So we should be seeing price take itself down to our first target of the 10850. Hopefully see price consolidate around here and then get us back to 105 or even hopefully the 100 psychological level right there. Extension, if I put a fib on this, let's see if the fib's actually showing anything on the daily time frame. Nothing on the fib. We'll zoom in to the 4 hour to see if we can actually get anything. Again, zooming on the 4 hour, extremely bearish. The price sits underneath all three of my moving averages right there. Looking at the, if I wanted to take an entry pretty much at the market open, if I look at the 15-minute chart, this will give us a nice intraday trading opportunity. Some simple things that we can actually look for right now when opening this chart is we obviously need to look at the trend lines. So we spotted a trend line here which has been respected. Then again, highlighting the wicks is very important as well. Looking at where price has broken through. So we've actually got this broken trend line right here. So we've got a trend line break. Draw this right on the edge of the wick. So we've got a trend line break right there. We've got a retest. I would still class that as a retest. We were just a few pips off and we failed to actually get above. So we've got a bearish corrective structure happening right now. Now, looking at a more recent setup, let's see where we are. We've got a trend line there. We'll get the fib on. So from A to B. We've had a bit of a reversal in between the 38 and 50% fib. Where we should be looking at is, we should be looking at first target 110 at our minus 27.20 fib and our negative 61.8 to complete this A, B, C, D pattern. So we've got our A at the high. Got our B at the low. We've got our C. And then we got our D1 target, which is pretty much sitting at that long-term trend line as well. And then we've got our D2 target, because we should be seeing a nice bearish momentum form once we've broken this corrective structure. We will hopefully be looking at entries on the breakout of this structure. So if I let you know where we're looking at short positions, you want to basically be taking shorts around 110.31. Take yourself down to D2 target. We're looking at like 50 pips here. And you pretty much want to be stop loss at 110.50. So stops around this region, get ourselves down here. Hopefully we can get a nice breakout. So price head down, play around this trend line, hopefully do a breakout, and then just get us nice and clean down to our target right there. Because this is a free video, and we are only going to be literally doing this one bit of analysis on here. Obviously, for you guys in the full members zone, you're going to get an additional few videos on this analysis. Thank you very much for your time. Hope you have a very safe and enjoyable trading week, and we'll speak to you soon.